Hello again, everybody. This is Matador from freetradingvideos.com. It's 12:35 p.m. Eastern Standard Time, Monday, January 11th, 2010. And after a nice gap open, we watched the markets try to hold at this 115 area briefly, and then failed all the way down to the rising 200 MA on the S&P ETF. The SPY, this little 3-minute chart, broke that, found a swing low finally, used that as resistance. Went to a lower swing low at 114.30 area, which I'll show you in a minute. Ran to a lower swing high, and now we're starting to fail this level right here. And I'll talk to you about that in just a second. Let me remove this pre- and post-market data. So now you can see kind of what's been going on at this 114.30 area over the last few days. Actually, a lot of resistance, and resistance got broken very, very nicely, and we've used that as support now. Right through here, drop a little ellipse, and now we're holding up at the rising 100 MA and this swing low intraday. Again, just a little 3-minute chart. So this is a much better than 100% gap fill. If you were to drop that line in, a lot to talk about right now. Good try for support. Broke it, became resistance, tried to break it again, and then fell back through. Now it's resistance. So this 114.60 area, make it a nice even number here, makes a lot of sense to my eye. Watching that as resistance on the way back up. Another good one here at 114.70, and then the 115 mark. So that would be overhead resistance. Underlying support we talked about right now at 114.40, 114.30, and then the round number of 114 even. On a higher time frame, the 15-minute chart, you can see another interesting line here, besides the one we drew in at 114.30, is that this breakout occurred, and this 114.20 mark also becomes support. Is a rising swing lows through here, excuse me, also denotes that we've reached some level of support here at that trend line, and we need to see if the 114.40 mark holds. If not, then we're sort of consolidating on a symmetrical triangle through here, and it's going to resolve one way or the other, I promise. So we need to be really careful about this area that we're in right now, instead of just abjectly going long or short right here. On an even higher time frame, you can see that after multi-bar moves to the upside, it's not atypical to see some kind of consolidation. The trend, if we look intraday here, has been nicely bullish, but right around the neutral range, and we finally entered the neutral range in earnest right around 11:30 or so. The trend Q has spent most of the day in the neutral range, and around 11:30 popped up into the even 1.5, 1.6 area, only to pull back to the 1.2. So true consolidation here. And the VIX, oftentimes I like to say a good tiebreaker, gapped down very, very nicely this morning into an unheard of 17 mark, and is now partly filled that gap, but not completely. And if you look at that gap fill on a fib retracement, we're right at the 50-yard line. So that's going to be an important number to see hold, this the 1750 mark. So make sure that you watch that very, very closely for bullish or bearish confirmation. So good stuff, everybody. It's a nice run around the markets. A lot to talk about today, technically, pretty cool. And hopefully get to talk to you all tomorrow evening as well. Like I talked about in my morning video, we'll be doing our 2009 review, 2010 FTV predictions, and also a Meet the Mentor meeting at the end, where we're going to give away a mentorship. So pretty exciting. Hope to see you all there. And if not, we'll catch you next time. Have a great rest of the day, everybody, and look forward to D7's video at the close.